Old Mutual announced in March that its CEO, Iain Williamson, would be taking early retirement at the end of August this year. Williamson has had a 32-year-long career at the life insurer, having joined the corporation at a tender age. In 2020, he took up the reins of CEO and was faced with the major challenge of being at the helm of an insurance company right at the height of the COVID pandemic. And SABC News economics reporter Nompumelelo Siziba caught up with Williamson to reflect on his experiences in the financial services industry and also find out what's next for him. She started by asking him what he felt were major challenges that businesses, particularly the insurance sector, faced in these modern times.
We've moved into a much more volatile world. If I think over the 5 years of my tenure as CEO, we've had 2 years of COVID. We've had the political challenges in South Africa. We've had the load shedding issues. We've had economic growth challenges. We've got the current wonderful geopolitical landscape and all its uncertainties and all the local challenges around the GNU. That's quite a lot in a fairly relatively short period of time. And it just feels like the world has become a lot more volatile, a lot more unpredictable. And so it does mean that you almost need to set yourself up to be prepared for anything, up, down, or sideways. and equally, I think it means also that because we've had such a extended period of lackluster economic growth, particularly in South Africa, consumers have been under a lot of pressure. So the buying power that maybe was there 20 years ago is no longer there, and you need a much more compelling value proposition, good value for money, and an ability to engage with consumers in a way that helps them to understand why your products and services are important and why they should prioritize them in their purchasing basket every month.
I wanted us to hone in on the issue of the global threats right now, the trade tariffs, and also the local political uncertainty, with the GNU. Is the DA going to stay? Is it going to go? And there's a lot of very raspy language that's being exchanged between the DA and the ANC right now. How do you see all of this filtering through into the financial services sector? Because interestingly enough, we saw that on the stock market, it was the financials that were actually leading the charge downwards when markets were falling.
Yeah, so I think the market reaction has mostly been around the tariffs and the Trump uncertainty, rather than the more localized issues. So markets around the world are off materially. And I think the reason for that is I think that tariffs are creating three issues. They're creating the potential for higher prices, so inflation. They're creating a much higher probability, I think, that the US goes into recession. And so that'll end up in a low growth, high inflation environment, or stagflation as the economists call it, and the markets hate that. But I think the third variable is it's just created a much higher degree of uncertainty. And obviously that markets hate uncertainty and they don't like the risk that goes with it. So risk is up. The outlook on a central case is worse. And markets are down. I think that's broadly the picture. As far as financial services go, I mean, if I speak to retail financial services first, the impact is mostly on the flow through. So, but it's twofold. It's the impact of markets on balance sheets. So interest rate volatility makes it difficult to manage financial services companies' balance sheets. And if absolute value of assets come down, many of the revenue lines that financial services firms earn are based on the value of the assets. So if the assets come down, then the future prospects for revenue come down, and that would impact share prices. The flow through that I refer to is the flow through mainly on the consumer. So ultimately, financial services thrives when consumers are in a healthy position They're buying goods and services. They're borrowing to buy goods and services. Companies are borrowing to manufacture new goods and services, and it's a virtuous cycle of the real economy driving a need for financial services. When that cycle goes into reverse, it gears into the financial services sector as well. So those are really, I think, the two things that are playing out. And it is, as I say, it's uncertainty. I think, a lot of volatility can be expected in the coming months until we get some sense of where this global landscape is going to land.
I asked Williamson to give his reflections on how the South African consumer had been faring of late and the future outlook for the consumer, given higher US trade tariffs and the possible prospect of higher VAT.
Fortunately, I think consumer balance sheets, let's say 4 weeks ago, just to pick a date, were in a much healthier state than they were for the last 2 years. So what we've seen credit default rates coming down. We've seen loan books health recovering. We've seen interest rates coming down. We've seen incomes going up as wage settlements have come through into consumers' pockets. So before a month ago, I would say things were looking a lot brighter for consumers. So it's important to just put that reference point on the table that, we started from I think a much healthier position. If this had happened a year ago, I think it would have been a real disaster because consumer balance sheets were really strained at the beginning of last year. However, now the forward-looking prospect for that has got a lot worse than it was, and it's for the reason you suggest. Inflation could well go up. I think oil prices come down, so that's good for South African inflation. The rand, however, is weakened, so those two things are offsetting each other. And then it remains to be seen what the real impact of the actual tariffs piece is. Most of your core middle mass market consumers in South Africa probably don't have a great deal of imported content in their CPI basket. So I'd like to think that impact will be not as extreme as we might think. It'll be big on the big ticket items, white goods, cars, that sort of thing. But on day-to-day expenditure, transport is mostly a fuel issue, fuel price issue, food prices, etc. I think we may well avoid the worst of that problem.
Here's the harder part of our conversation where you talk about yourself. And it's really to ask the question, what would you like your colleagues, your peers in the financial industry, service industries to remember as your legacy in the years that you were there at the helm of Old Mutual?
So I've been at the helm for 5 years, and I think the reference point is I started right in the middle of the hard lockdown of COVID. So I think I'd like to think people remember a sort of solid, stable set of leadership with, I think, some courageous decisions around investing through the cycle, through what was a torrid time for our industry in particular during COVID, because insurers were very, very hard hit by COVID by a combination of claims, both unfortunately death claims, as well as business interruption claims on the short-term insurance side, as well as the impact, like everyone else had, of the shutdown of the economy and the inability to do business from a revenue generation perspective. So it's been really a recovery and a recovery job in a way from a very difficult situation into something more normal, whatever that means in this day and age. And I think we've put a lot of capability in place in that period. So we've launched our new life product range on the risk side. We've launched our bank. We've got a new savings and income product range coming out on the life side in the next couple of months. So before I leave, that should be done. We've revamped our rewards program. We revamped our tools that we give to intermediaries, and we've revamped our short-term insurance value proposition and fundamentally fixed our short-term insurance business. So I think I've created a very solid base of capability, of high quality capability, that will allow Old Mutual on a forward-looking basis to offer a much more consistent, higher quality set of services to its customers on a forward-looking basis. And it's really been, we've as a company, we've pinned our colors to what we call an integrated financial services strategy over the last 5 years, which is really about showing up as a one-stop shop across a wide range of solutions. I think all those solutions, and more importantly, the glue that pulls those solutions together, are now largely in place. So it's been a build and to some extent a fixed job over the 5-year period. And I'm really proud of what the team have managed to do over the last 5 years. I think they've done an incredible job.
Williamson says after he retires from Old Mutual, he'll be enhancing his existing skill set by doing some further executive studies, adding that he's made it a habit during his career to regularly update himself through formal short course studies to remain relevant, especially in this modern era of fast-paced technological developments.
Beyond that then, what is Iain Williamson going to be doing? Because, I mean, you always tell us as insurers, you could live until you're 100 years old. Are you fully covered? So if that's the case, what are you going to be up to beyond, Old Mutual?
Yeah, so I think just to give some context before I answer the question, I've been at Old Mutual for 32 years, so you can add another 4 if you add the fact that Old Mutual paid for my university studies. So I literally have joined them at the age of 18. It's my entire adult life. So it's just a context of saying, I've had a lot of growth, development, satisfaction, and I like to think I've contributed a lot as well in a particular sphere. But there's a whole world out there of other things that, one could have impact and make a difference in. And I think at the age I am, I've got a good 10 years of productive contribution I could make in a number of areas. I'm passionate about quite a few things that I think will be impactful in the South African context, particularly fields of healthcare, education, infrastructure, and obviously the financial services, financing of all of that. And I'm also a little bit of a technophile. I love technology. I'm a big believer in the ability of technology to scale solutions for good.
Williamson says he'll be taking some time out for a few months after he's left Old Mutual to work out exactly which areas he'll be looking to contribute meaningfully to. Nompumelo Siziba, SABC News.